Na na na, gonna have a good time. Hey, hey. Oh, that's getting up. Let's on over to alrighty. Good evening, everyone. My name's James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks, a weekly cash flow, looking to take you guys along for the ride for a simple, fabulous, safe, wonderful, predictable day. Uh-oh, we got some noise in the background over there. Andrew, good evening. Baratali, good evening. Fabulous. Marvelous. Not fabulous, marvelous. Okay, anyway. So basically what we're going to do here, I'm going to show you the trading strategy I came up with in 2008 for my 9-year-old daughter. When she said to me, Daddy, what are you doing? Can you teach me? Think about it. 9-year-old little girl wants to learn how to invest in the stock market. She wants to trade. Okay. How am I supposed to do that? I can't go teach her the normal way. So I had to come up with a strategy specifically for her. 9 years old. Simple, safe, predictable, consistent, no way to lose. That was the big one right there. I had to make sure she didn't lose any money because I didn't want crying. Because she started crying, I'm going to be sleeping on the couch. We all know how that happens. Little baby girl's at home crying. Yeah, Daddy's sleeping on the couch. Daddy did something wrong. Anyway, so simple, safe, predictable, consistent, and no way for her to lose. Let's take a look. So 5 rules came along with that 5 criteria. 5 rules, 5 criteria. Anyway, rule number 1, never buy something you don't want to hold on to long term. Rule number 2, never sell at a loss. It defeats the purpose. Okay, it's a game. We're trying to win, not lose. Rule number 3, make sure the company is consistently profitable. Wow. Okay, Howard, what's going on here? Why are we in a classroom? Because we're learning something. What are you doing? Okay, never. Never sell. No, wait. Never buy something you don't want to hold, and never sell at a loss. Number 3, make sure the company is consistently profitable. Number 4, weekly options only, please. And rule number 5, let's make sure all the numbers work. We're actually going to go over a few of those and see what we come up with. So, for the rules, if you want me to take a look at one of your stocks, great, I'll take a look at it. But if you could, please, don't show me something at the high of the year. It doesn't give us any opportunities. Make sure it has weekly options and dividends, please. We got a question over here. Question from the Peanut Gallery. What do we got? Thoughts on, AAP, Mara, Marvel for tomorrow. Cool. T-Mac will take a look at that very shortly. All right, Lloyd. Thank you there, Mr. Lloyd. Oh, Street. Thank you, Street. Okay, so what we're doing first. Hey, John, how's it going? Francis. Okay, what are we looking at on the screen? Eric, here we go. Just getting ready to get started. First one we're going to look at is going to be advanced auto parts. And the very first time I look at any chart, I'm looking for 5 things that takes me 3 to 4 seconds. Only 5. Now I can spend hours looking at all the data here, but 5 simple things, they stand up pretty darn good. For this, we're going to need my little magic thingy. All right. 5 things. Ready? Number 1, the high of the year. Number 2, the low of the year. Number 3, where was it a year ago? Number 4, where is it right now? And number 5, what is the motion of the ocean, the flow of the waves, the path through the woods, the river down, whatever you want to call it. Up, down. Now she's going back up again. Simple. 3 to 4 seconds. That's all it takes. After that, I want to take a look at the numbers. Remember I said rule 5, make sure the numbers work. Well, for rule 5, what is the number on the board? 5456, 5456, 5456, 5456. What do you think? It's up there 4 times. It's got to be something. All right, hold on. I'm going to pause the questions right here so I don't miss anything. Sit tight. All right, so once we're done looking at the chart real quick, we want to take a look at numbers real quick. So the last trade on Friday was 54.56. So if I'm going to go and buy it tomorrow morning, 54.56, what strike price am I sell against it? Because what I'm doing here is what's called a covered call against a dividend stock. These dividend stocks are predictable, so we know when they're going to move. So if we know when they're going to move, well, what's the best trading strategy to use against them in order to consistently? Let's put the odds on my favor. Let's put this screen in my favor. So we know when the stocks go up. Now, a covered call is a very simple, easy strategy that allows you to buy a stock, sell an option, and the stock doesn't even have to move. We're still going to make money on it. Now, see, if the stock goes up, great. If it stays the same, doesn't go anywhere at all, great. Sometimes they can even come down a little bit, and we're still okay. That's the beauty of covered calls and options. Now, I'm only going to go over strategy tonight, so don't. Anyway, advanced auto parts. So if I'm buying it at 54.56, well, tomorrow I want to sell either the 54s or the 55s. I'm going to do the 54s because it looks like she's heading to the upside right now. Maybe stalling out a little bit, but we're going to zoom into that a little bit further. But before we go on, if I'm buying it here, selling this, I'm collecting that $3.20 per share. $3.25 per share. That's huge. That is roughly I'm going to say a little over 6% for 1 week. Imagine that, a trade on a stock that you like, Advanced Auto Parts, if you like it, of course. And then the stock may be in an trend. It may be going up. We're going to zoom a little closer. Okay, but if it's a safe strategy, stock doesn't have to move at all, and we're making 6% 1 week. Now, my goal is 1% a week. If this is going to give me 6, well, I'm going to say hell yeah. Hell yeah. All right, anyway, let's take a look. So these numbers look fine. Great. Now we go back to the chart. See exactly what the chart is telling us. It's telling us something. It's for the high for the year. It's where the low is, where it was, where it is, and the motion. That's all it's telling us here. Now we want to zoom in a little closer. Zoom in a little closer to get a little bit more details. Now, that's what it's done for the year. Great. Well, what has it done for the weeks and like it's going next? Because isn't that important? Not just jumping into a good stock at the right time, but what direction is it going? Is it dropping like a rock or is it climbing like a turtle? Who knows? Let's take a closer look. All right, so a year ago, would you believe my monitor, which is 5 feet from standing here, it's 5 feet away. It's a 60-inch monitor. It's freaking huge, and I still have to wear glasses. Don't listen to people when they say getting old's wonderful, golden years. Yeah, no, they're lying to you. I didn't need these things years ago. Anyway, so take a look. A year ago, we're at 36.8. The bottom year was the second week of April. We call that TDS day. The high of there was toward the end of July, and that was 69.91. Okay, so from there, she pulled back down. Look at the days. Now, there's a reason why I want to look at the 30 days, 26. There we go. Because the last 30 days gives us a good idea, or I should say, gives me an idea of where do I think is going next. And I use that based on, human psychology. Let me explain. 30 days ago, this stock is at 64, way up there. Okay, now there's certain people out there, just like me, when they have a stock and it jumps up, we like to jump out and take our profits. And what happens? Stocks drop. 30-day top. Okay, start taking profits. Stock comes all the way down till it gets to a point where people say, "Wait a second, Advanced Auto Parts at 49. Yeah, I'm gonna jump in. Jump in, goes up, back up, back down. Basically, it's all it does. Goes up, down. Now, when stock goes up, you get people like me. They jump out and they take profits, and the stock drops. And then and goes back up again. Well, here, the pattern, down, up, down, up. Now she's coming down. So the opportunity, in my humble opinion, for me. Now, this is I'm not giving you guys advice. I'm just telling you what I'm doing. So as much as I like Advanced Auto Parts, I'm going to hold back this week only because it looks like here there's still going to be more profit taking in. She is in a slightly downward spiral at the moment. So I'm going to pass on for this week. But I'm going to keep my eye on it for next week or the week after. All right, so next. What was the next one? Mara, M-A-R-A. Now, I have this also. High, low. Where was it? Where is it? Up, down, up, down, up, down. What's going on here? Can't really tell there, but it looks like it's bouncing right there and going up. Looks that way. Fine. Let's look at the numbers. If I'm buying it tomorrow, 1954, so the 1950s, are you kidding me? 91? That's close to 5%. Well, why the hell not, right? Uh-oh. Someone wants to take a look at SLV. Type. All right, so chart okay, numbers okay. Let's dig deeper into the chart and tell us exactly what it's telling us. See, a year ago, 1842. The high of the year was the end of November last year, 30.33. Okay. We bottomed out, yes, middle of April at 9.67. Can you imagine that going from $30 down to $9? What is that? 67% decrease. That's a big drop. All right. Now, last what I'm most interested in, because I want a good idea of where do I think it's going. Well, look at this one. This one looks pretty good. We got a 30-day bottom, okay, a 30-day top. Now she came back down 2 days to the upside. One bottom, 1, 2 to the upside. Now, for me, that's almost perfect. For me, number one, I already have. Okay, if I was going to jump in new tomorrow, me personally, I would wait until this thing opens up just tomorrow morning. Is it going to be higher or is it going to be lower from Friday's close? I like 3 days to the upside. First, third day, I will jump in. So even if, here's the funny part about it. It happens. It does. It will open higher, come down lower. Sometimes that happens because we never really know what's going to happen next. But if we look at the chart, for my 9-year-old daughter says, honey, does it look up, down? Now it's going day 3 confirmation for upward trend. And it was designed for a 9-year-old. See, adults want to make this more complicated than it needs to be. Okay, I have over 1,200 videos on YouTube. Okay, this episode is being recorded right now. For reference, it is 9:01 p.m. 10/26/25. 10/25. So, either before or after that, it's recorded. If you're here tonight, it is being recorded later. Things over and over and over again for the past 10, 15 years. Okay, up, down. Now it looks like it's going up. Could it be? Yeah, it's a 50-50 shot, and it looks that way. Next, this one. So why don't we do a trade on this one at the 1950? Okay, it's 1954. If we sell it at 1950, this is what we're collecting. I want you to see exactly what that looks like. Okay, so let's do one. Let's get out to here. Let's go to there. The 1950, right there. Now, one thing I really like about Thinkorswim, anytime I change strategies from one strategy to the next, it automatically fills everything for me. All I got to do is want to buy. Well, I don't have to worry about everything else. It's already done for me. Anyway, I like it. That's just me personally. All right, so the 1950. Let's just do one of them. So you have an idea cost. All right. This is sound like. I tell people to sound it out. it out loud. You hear what you're doing as well as seeing what you do. Because sometimes your eyes can play tricks on you, and people lose more money by pressing the wrong button than any other thing. It's weird. All right. By one covered call, Mara, 31 October 25. That's this coming Friday. Can you believe it? This Friday will be the end of October. And then we got 2 months until the end of the year. The first year is just like zipping by. Anyway, the 31 October, that's this coming Friday, the $19.54 call option. And it's called a covered call because it gives somebody the right to buy it from me at 15 anytime between when I sell it tomorrow morning and when it expires on Friday at 3:59 p.m. Because we all know at 4 o'clock you can't do anything. So, that being said, this is the order. Now, let's see what the rate of return. Now, remember, it's a total different way of thinking. Hey, we're investing for annual returns. You know, hey, how much I put in there and we get at the end of the year? No, this is weekly, every single Friday. Think. You can spend 2 or 3 minutes on your phone. It's a stop, whatever. Okay, waiting in line to get your coffee. Bing, bing, boom, you're done. It's a very simple strategy created for my 9-year-old daughter. And if it works, well, why the hell not? Think about it. 1% a week is not a lot, so it shouldn't be that difficult if you put all the odds in your favor. And that's what we're trying to do here. Put all the odds in my favor so I can get 1% every single week. Okay, so that being fine, let's check it out with the calculator, find out exactly what the rate of return is going to be. Calculator, wherever you see hiding in the shadow. All right, anyway. Do you see what I see? That's crazy. Maximum profit, 50 cents. No. What the hell was I thinking? Let's get out of that one. Let's do 50. Okay. Let's do the 20s. Okay. After hours stuff. Okay. No, just one. That was crazy. I've never seen that before. 50 $30, 1900. Okay. I've been doing it long enough. I can just take a look at this and say, okay, fine. Okay, let's read it. It's the same strategy as the one we just did. But this one, buy one covered call Mara, 31 October, that's this Friday. The $20 call option. Okay, here's the maximum profit, $30. And here is the investment, $1,970. Okay, $1,900. It's the weekly return, $30. Let's find out what that looks like. Okay, if the dollars divided by the investment, $1,970, and comes to a total of 1.5%. 1.5. That's 1.5. Well, think about it. If 1% a week comes to 50% at the end of the year, well, 1.5's got to be at least 70. I don't know, but think about it. That's a nice return for 1 week. All right, next. Next, we have Marvel. Ooh, going on with Marvel. I think there's no way. All right. This. Why did that not dawn on me? Get my microphone there, and it's like I'm trying to see around it. Just take the damn thing off, put it on the floor. What the hell was I thinking? All right, we're going to do Marvel next. M-R-V-L. M-R-V-L. Ooh, I like that. Check it out. Chart, 3 to 4 seconds. You ready? High, low. Where was it? Where is it? Up, down, up, down. Okay, good. 413. The 84s are going for 289, and the 85s are going for 243. Let's do the 85s because it's better. Always check. If you have a question, just check this math problem. What am I make? What's the maximum profit? Because the nice thing about the covered calls is tell exactly what the so you can take that by, well, do I like the company? What's the chart look like? And then you can put a bunch of different strike prices to find out what's the rate of return for each one. And then what's the probability of it being at that point by this Friday? Well, let's take a better look. Okay? A year ago, we're at 82.92. That's kind of suck. You're at 82 last year, the same time, and now you're at 84. What do you make? $2 for the year? For those of you who hold for a whole year. So I'm not a yearly holder. Hell no. Think about it. Look at this. A year ago, it's at 82. Now, it's at 84. So imagine if you're... See, that's one of the wonderful things about holding long term. Because stocks go up and they go down, they go up, they go down. So think about it. If you bought it a year ago, 82, well, now it's at 84. You made $2 on your return, which is more than, 2.5% for the year? Maybe. Well, not me. I buy and sell every week. So boom, 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 boom. I make at least 30%. Anyway, let's go. All right. The high of year was 127.48. And there's the bottom, 46.90. Well, good idea. We think is past. Now that is pretty plain to see. The high, the low, where was it? Where is it? Up, down. Now she's going up. There's your bottom. There's your 2 days right there. If this thing is higher tomorrow morning, hell yeah for me. That's my rule for me. But you shouldn't listen to me. You shouldn't listen to anybody online. Do your own research. Does it make sense? Is Marvel a company I want to buy? These are all valid questions you should be asking yourself. Not listening to some idiot on the late night sun. Anyway, that being said, let's keep on keeping on. Okay, so 84. Let's do an 84 on Marvel and see what it looks like. And then we're going to take some questions because we got a bunch of them stacking up. La 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 la. 84s. All right, 84s. Here we go. 85. Okay, there to there. The 85s right there. That's one. Because one is the loneliest number. Here's Johnny by one covered call of Marvel. 31 October 25. That's this coming Friday. The $85 call option against the stock at the market to open. 198.50 the profit, and the cost of the trade, including commissions and fees, 8,300. Okay, think of it as an investment, as I like to say vending machine. Now, the reason why I say vending machine, a lot of people don't understand what a vending machine is. When you get to a certain age, now when you're young, a vending machine is kind of like Candyland, Shoptime, like put nickel in the Nickelodeon, So, and then you just drop the money in, you get whatever you can. Now, as you get older, and you see that as assets, that you could buy the machine, and then someone just feeds it, and you just get that money every single week, or every couple of days, you come and empty out the machine. Great, that's awesome. Think of it that way. Think of buying a vending machine. How much money is this vending machine bringing in this week? Now, opposed to a vending machine, okay, I don't have to go and fill the machine or empty the cash out. Granted, it's fun at first. The first couple of weeks you go get all this money. Yeah, this is all for me. And then the part that really sucks is, okay, 153, 154, 150. Yeah, that part gets aggravating. Or, change the machine. But then you get, anyway, besides the point. So think of it as a weekly cash producing asset. What do we have over here? I've got plenty of nothing and nothing plenty for me. Okay. I am broke as you are. Okay, bummer. Hello, brother. I just wanted to say thank you for taking the time and help others. Okay. You are welcome. If you're not computer literate, you better give your money to someone else and let them trade for you. Now, David, I'm going to agree with you. Some people, don't get me wrong. See, it depends on what side of the field you're on. And think about it, because it's true. Okay, if you have a huge amount of money that you can actually afford to have someone else do it for you, they have what's called the 4% rule. 4% rule is basically, can you live off of 4% of retirement? So let's say, hypothetically speaking, you got $1 million when you retire. Well, 4% is only $40,000. Can you live on 4,000? Well, if not, well then you need $2 million, which would be $80,000 a year at the 4% rule. Well, great if you got that much, but what if you only have 100,000? What if you only have 200 or 300? What if you only got 50,000? How are you going to do it then? Well, you can't give it to someone else because 4% of 50,000, what was that, $200? Come on, you can't live off of 200. No. See, so 1% a week, about it, at $50,000, $100, $100 account is a week. That's 1% per week. That's my goal. Okay, see, I don't have enough to give to someone else to live off of that income. No, I can live off the income that I generate 1% every week. You can check my historical trading, 15 years of videos on 15 years, like 1,200 videos over the last 15 years or so, doing the exact same thing I'm doing now. But this, you have the opportunity of watching it live and actually ask questions live. So if you have a good question, yeah, I can answer it right here, right now. But for those that are, watching the video afterwards, say, oh yeah, that was a good question. I'm glad he got that. All right, anyway, besides the point. So does it make sense? First question you should ask. Does it make sense by a good quality company that has weekly options so I can treat it like a weekly cash producing asset and every single week get something from that? If you think of it that way, I'm buying a vending machine for, what is this? $8,300. And at this moment in time, it's giving me let's find out what the percentage is, and then we can, argue a little bit better. Okay, so profit 1.8, the investment's 8,300. The grand total of 2.3%. Well, that gives us a little bit more to go on now, doesn't it? So think of it this way. Okay, you got a weekly cash producing asset. Call it a vending machine named Marvel. It's my Marvel vending machine. Yay! So you pay $18,000 for it. Now the nice thing about a vending machine, this one will go up and down in value, and when it goes high enough, we jump out. We get a few dollars on the way collecting the premiums, and then when it goes up high enough, we just jump out of it. If it drops, we just hold on to it and keep collecting the premiums. What's wrong with that plan? A weekly cash producing asset. Well, let's call it a vending machine, Marvel, and it's giving me $198 this week. You may not think that's a lot. Well, in actuality, it's really not. But you do that 52 times throughout the year. Because every Friday, I sit in front of my computer, click, click, click. What did I buy? What did I sell? Where's it at now? What should I do? Those are the questions. Well, most of those questions I already know. What did I buy it for? I already know what I bought it for. What did I sell? I already know what I did. Okay, where is it now? That's a variable. Where is it at now, and what should I do? It's really not that difficult. Is it going up? Is it going down? What is it giving me this week as opposed to what did it give me last week, and should I get rid of it? It's not that the question. It's like a multiple choice question. Ooh, that's good. I should throw some multiple choice questions together for that type scenario. Okay, I bought it for this. I sold this. Now it's at this. What should I do next? A, B, or C? Or D? None of the above. Okay, so, is that the Bruners ticking on in? It is. It's the Bruners making noise in the background. Hey, Richard, how you doing? I gotta mute him. All right. Anyway, so that being said, 2.3. Think about it. 1% a week is over 50% per year. 2% a week is over 100% per year. Well, this trade right here on Marvel, if you like Marvel, okay, remember rule 1, never buy something you don't want to own. you don't really like the company, don't buy it. It's just an example. And I don't give tips and I don't give advice. I just give observations. Somebody wanted to take a look. I took a look. This is my observation. That's all it is. If you want advice, you need to talk to an advisor, which definitely ain't me. Sorry. The only thing I can do is I give you, in my opinion, if it was me. That's about all I can do. All right, so I like that one. What do we have next? Let's get the chair out because we got questions. You got questions. I got answers. So what do we have here? Alrighty. Tom wants to take a look at Merck. MRK. Well, we got to do this first. I get rid of that. This. Do that. And you say, wait a second. Hold that thought. Which one did we do? We 86 right there. Okay. Before I forget, let's save this. I can show this one later on during the week. Okay, because my son over the weekend he showed me some neat stuff about this little book, so let's see if I figure it out. Okay, next. Come on. There it is, right there. All right. Come down to here, over to there, up to there. All right. Put it down there. All right. That's part of it. Hold on. Okay. Let's see if you.
I can't see your screen, but it was the 85s we were done.
What was that, T?
It was the 85s we were done.
Oh.
I couldn't see when you brought it up.
Okay, I brought up the 86s. All right, so let's take a look. I'm not looking at that one. Which one am I looking at? This one? Is that it right there? There it is right there. That's weird. All right, you move. That's last week's stuff. This is this week's. Yeah. See, as soon as my son taught me that, that's cool. All right, so let's check out the numbers again because he said I might have the wrong numbers. All right, can't see it. Okay. Numbers, here we go. Let me change just one contract because that was 10. There it is. Yeah, nothing changed there. Anyway, I just read the numbers. Here we go. Divide this out. 258 divided by 83.42, grand total of 3%. 3. All right. So, all right, that works. Okay. %. Now, put, a new list right there. Sunday night, 3%. That's our first one. Alrighty. Let's see if we can find another one. Let's get rid of this. Let's get rid of what do we have next? All right. NTSC wants to take a look at SLV. Not that silver ETF, SLV. Well, let's find out. SLV. iShares Silver Trust. Okay, why are we looking at iShares Silver Trust? Interesting. I'm going to say no right off the bat. Okay, who came up with this one? Adrian. All right. Adrian. Reason I'm saying no on this one for this week, Adrian, is this right here. 30 days ago, we're way down here. She shoots up. Here's your high. Now she's pulling back and going sideways. You 2 days right there, but now she's pulling back. Not quite where I want to be. But keep your eye on it if you really like it that much. Okay, what else do we have? MRK. Did we look at A yet? MRK. I think we did. Three like no problem. Okay, Arlene. Good evening, Arlene. Alrighty. So, Mark. Looks like she's puttering out. Okay, here's your 30-day bottom here. She shoots up. Now she's pulling back. Not this week. Maybe. Apparently, he is on 9 platforms. Thank you, David. I see you have the hand movement working on TV. First mirrored video. Yep, got that one. Advisors. Cheap. Thank you, Richard. You can just keep showing up, Richard. Ask questions. You know, I wouldn't do it on YouTube, though, because YouTube, I don't get to those questions that often. China and U.S. ironing out a trade deal. Let's see how the market works. Cool. Richard Strange, 100,000 at 1% is 52 yearly. Well, that's simple interest. You're correct. Compounded is more like 64, 67, I think. It's a nice number. Respectable. Lucidity. The mirror is the effect. The facing camera. Yep. Thank you. Happens naturally. What about Kraken stock? Never even heard of it. Kraken stock. It sounds like a horror movie, doesn't it? Kraken stock. Beware of the Kraken stock, especially in October. Watch out for the Kraken stock. Sorry, Scape, never heard of it. 5 nights per week, and he has to explain that every week, night after night. Yeah, David, believe it or not, I have to explain it night after night. It would be so much easier. How much money does your niece have left when she won the lottery? Nothing. She's working 9 to 5 now. Can you believe that? 15 minutes back to work 9 to 5. You know what they say? You win the lottery, a couple years later, you're worse off than you were before. Well, she has a nicer wardrobe now. All right. What are we looking on the screen? We looked at Mark. We did that. Okay. Bullish Boxer. Can you check LIDR? Okay. LIDR. No options. No thank you. Sorry, Bullish Boxer. Okay, we're here to... Okay, never mind. It is what it is. All right, let's go back to where we were. Right there. I seen that. Thank you. There we are. And I need a little British flag on my shirt. Why, you just do. Kilroy, I'm not 100% sure if you know this, but I'm not British. Anyway, Kilroy, thank you for that. Eric, afternoon. What are those numbers? All right, Robin, the numbers are different for each and every stock. Big Brain. Oh. Okay, even not big, I do appreciate you asking questions. I just wish you didn't box. Okay. Plains All American. Okay. What about Plains All American, Big Brain? This right here. The insurance premiums. So if I buy the stock and sell a covered call against it, I have to be exactly right. Because if you're not exactly right, the premiums are horrible. And then 1 strike out, terrible. 2 strikes out, nothing. So stocks that have some good numbers behind it. And Plains All American really doesn't. Now, it's got nothing to do with the stock at all. Nothing to do with that at all. It's these numbers over here. They just make sense. For me, anyway. Thank you, Big Brain. He's looking at covered call prices next. Okay. What up, James? Comcast this week. Be Red Daddy. The MCSA. Ooh. Now, basically, what we're looking at here, Comcast, the high of the year was a year ago. Then she's dropping. Look at this right there. That is the bottom of the year. Now, don't get me wrong. I'm not trying to give any advice here, but here's the thing with Comcast. They've been around since 1964. All right? They have over 60 million customers giving them a paycheck every month. 60 million. The stock is down. You cannot buy it any lower than the low of the year. Now, that's not a tip. That's just an observation. Okay, a year ago, we're at 45. Now we're at 28. It's the lowest it's been all year. Many, many times. To make money in the stock market, you buy low and sell high. Now, it may not be the exact time to buy it, okay, because I like the bottom. And apparently that was last week. She went up 2 days. Now she's going back down again. So now we're sitting bottom fishing again, you could call it. Looking for a new bottom for this baby to turn around and shoot back up. Because it's going to eventually. Where are you going to be when it does happen? Okay. It's not as if, think about it, it's not as if we Americans are going to walk away from our TVs. That just ain't going to happen. So they're one of the biggies. Next, do I like the wheel strategy? Kevin, I like the wheel strategy, but I'm not teaching it here, and I didn't teach it to my 9-year-old daughter. Okay, the only thing I taught her was covered calls and dividend capturing. That was it. It had to be simple. Remember, when she was 9 years old, it had to be simple. Now, I just use this strategy for, let's call it a beginner's course. It's simple, it's safe, it's predictable, it's consistent, okay? And if you do it right, you can get 50% per year. If you do it right. Because it was created for a 9-year-old. And it was simply put together for a 9-year-old to understand. You know, stocks go up, stocks go down. They don't really do anything else. And if you know when a stock is going to move based on history, well, think about it. These companies have been in business for, some of them 100, 200 years. And they've been doing the same thing year after year after year after year. Well, to them, it's kind of like clockwork. You go in, you do your work, you come home. Do it, same thing, nothing different. Boring as hell, but predictable and consistent. And with a simple strategy like the covered call, you get in, get out, make 1% every week, and not really break a sweat, so to speak. Marathon on Connect. Having up then on the 30th. Hell no! Last time I checked, gold was at 31, then 33, and now it's 4. And that's the last 6 months. But gold, don't trade. Private hoard, my strategy. Hey, liquidity, grooves. You know what? If you're right, great. But what if you're wrong? Think about it. What if you're wrong? Because the companies that offer a service, yeah, well, the service may come and go and the product may come and go. But at least it gives you a capital flow. Something, because even if you bought, let's say, at 29, let's say you bought it at 29 and it dropped down to 9 or 8 or 7, even if it drops in value, they've been increasing their dividends for the last 25 years. So more likely, they're going to try to keep the dividends flowing nicely, or you get kicked off that list. Now, believe me, a lot of CEOs want to make sure they stay on that list. Dividend kings, dividend aristocrats, dividend champions, those lists. Because getting that prestigious accolade makes it more attractive to investors, and that's what companies are doing. They're creating their businesses to appease the shareholders. That's what the public companies. So, even though gold is moving up like you did, you can take a look at the gold rushes from the years ago. Okay, let's take the last one. What was it in 79, 80, 81, 82, somewhere in that area? Gold went from 250 up to $800. I mean, it went from 250 to $800 pretty damn quick. Well, the people who bought it $800 had to wait 30 years. 30 years to break even. Now, who's to say the same thing's not going to happen again? What if gold hits that peak? And then what if old Donny Boy takes all our gold and puts it up as collateral to get into the cryptocurrency, which then eliminates the U.S.? We could go lots of things, lots of different ways of looking at this. You want to buy gold? Hey, fine. I haven't seen one bar of gold ever give me any type of return on a weekly or monthly basis. To me, it's just an overpriced dust collector. Think about it. What else are you going to do for gold? Think about it. At least with Comcast stock, the company gives you a higher dividend every year. Every 90 days, you get a return from it. Well, this way, what we're doing here, we can get weak cash flow from our investment into Comcast or whatever company we put it in. Kellogg's, Jones, AT&T, Verizon, MasterCard, Visa, Bank of America. Okay, companies, a lot of them over 100 years old. I don't know about you, but gold that just sits there, and yeah, it's been great for the past couple of months, but what's around the corner? Nobody knows. But you know, these companies have been in business for, well, Comcast over 50 years, 60 years. They're not going away no time soon. The only way to get rid of them would be a blackout. Then nobody had any TV. And then all your gold wouldn't do you any good anyway. Anyway, next. What are we looking at next? All right. Have a great week. Thank you. Be right back at that one. Eric, Mara. We looked at Mara. Yeah, Eric at 20.5. Got it. We looked at Mara. NXP. Eric. NXPI. 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 Very interesting. Now, I don't know anything at all what this company does, so I really couldn't tell you anything about it. I always say, never buy something you don't know or you don't understand. So I'm admitting I know nothing about this company. So that being said, let's go over to YouTube Finance and see if we get some quick little stats on it. Take it. Well, it seems to be. Oh, there it is. All right, so let's put in an EIT. Hold on. Here. Okay. We have a dividend right there. 1.5. All right. Move it forward. So we take a look at the history of increase to historical, look up historical prices, and then only. Now the reason why I want to take a look at dividend only is because if the dividend is a portion of the company's profits and the investors, well, if that increases every single year, well, we know that company's profitable every single year because you can't increase the dividends without increasing the profits first. So I don't have to look at 20 years of reports, annual reports, all that kind of stuff. No, I just go right to the dividends. Are they increasing? Well, if they're increasing, then it means they're being more profitable. Let's take a look. Back to get a problem right there, Eric. 2018 was the very first dividend. So this company's only 7 years old. If all right, 56, 84, 101. That's it. It went up 4 times. 7 years. So the dividend went up 4 times in 7 years. Not every year, but 4 times in 7 years. Okay. Anyway, do you like it though? Eric, that's what it comes down to. Do you like this company? All right, the last 3 days, let's see where this baby is going. Where are you going? Ooh, interesting. Take a look at that. Well, kind of interesting. Okay, the high, the low, where was it? Where is it? Look, up, down, up, down. Now she's going back down. Who knows? Because Thursday was a nice up day. Friday was a down day. Okay, so she got up. Now she's going back down again. Not what I'm looking for. But still, if you like that company. Mike, Tesla. Now, Mike, I usually don't do Tesla because Tesla doesn't have any dividends, TSLA. But here's the thing. Tesla, I just got to figure out what is the safest way to trade Tesla. Because without the dividend, it's hard to figure out when it's going to move next. Because with the dividend stock, they pay a dividend every 90 days, which is once per quarter. Well, that's easy to trace. You know, if it pays on the 17th of the what, second month? Think about it, because it's 3 months per quarter. All right, 4 quarters. January, February, March. That's quarter 1. April, May, June, quarter 2. July, August, September, October, November, December, the 4th quarter. So we're currently in the first month, 4th week of the 4th quarter. Week of the first month of the 4th quarter. That's where we are right now. There's only 13 weeks in a quarter. And we've already seen 3 of them. This is the 4th one. It's 13 weeks in a quarter, and we've already 4. We don't have much further to go. 9 more weeks till the end of the year. Well, great. Well, a lot can happen in 9 weeks. But what's going here? Well, let's find out. Last 30 days, we just talked about this. Last 3 days. Yeah, up, down. Now she's back up, or is she back down? Because, see, Thursday's here, she shoots up, then she pulls back down. So now we're here. Not really doing a whole heck of a lot of anything. But do you like Tesla? And how do you when does Tesla move? The dividend stock, well, they have a repeatable pattern. Just before they pay a dividend, stock goes up. It goes up, it goes down, it goes up, it goes down. But just before it pays the dividend, the stock price usually goes up. That gives me a good idea when to jump in. Because I want to jump in and then jump out and just grab that little tiny 1%. Just give me a little bit. Oh, yeah. Anyway, Gamma. If it rises, you limit your profits and only take the premium. If it falls, you have losses. All right, Gamma, let me see if I can... all right, number 1, you're new here because I remember that name. That's number 1. Number 2, I really don't care about the upside. Okay, so you got to think of it in context. All right, context, I'm looking for a safe, predictable, consistent 1% per week. Now, we all know that there's over 10,000 companies, okay, 10,300 and something. We check it once a week. We haven't checked this week yet. But anyway, over 10,300 different companies, all aiming to do the exact same thing. So everybody wakes up first thing in the morning, they have one thing in mind. Let's make today better than yesterday. Well, hypothetically, they're all looking to advance, all looking to make money, all looking to provide goods, all have the same goal in mind. But they're not all going at the same pace. They're all heading to the finish line, but they're all headed at a different pace. So if I jump from this one to this one to this one to this one, always moving forward, my goal is simple: 1% a week, every single week of the year. Every week of the year, I want 1% a week. That's it. Because my portfolio, okay, 1% every single week pays all my bills. And I live a very comfortable life. I do. Okay, so I'm not worried too much about it. I'm not looking for the stock to jump through the roof. And if it does, I'm not upset. I'm perfectly happy for whoever bought that option and is taking advantage of that. Well, good for them. That's not my goal. My goal is the 1% every single week with consistency. All right. So when you get to a certain point in your life, your view on money changes. Because I'm what I call a fixed income. That's it. All right, so that being said, also, if it falls, I don't have any losses because at Gamma, I only have a loss if I agree to sell it for less than I paid for it. And if you've been paying attention, rule number 2 is never sell at a loss. It defeats the purpose of the game. All right, Megan, when you're tracking earnings, because I got a sneaky suspicion, Megan, you're going to be a little disappointed when I answer this question. Because usually everybody is. All right, when you're tracking earnings, do you just count your premiums or do you do a value of everything combined? Yes and no. Let me explain. Okay. At the beginning of each and every week, we have what is called a liquidation value. The liquidation value is usually if I sell and liquidate my account at this moment in time, that's the value. Okay? So let's say, hypothetically, okay, let's say I have $100,000 in this account. That's the liquidation value on first thing Monday morning. So if that's my value of my account, 1% of that would be $1,000 for the week. So my $100,000, I want 1,000. That's 1%. So I have however many positions. Okay, buy a stock, sell the call, whatever I do, I want 1% a week. Now, if I get that 1% a week, and then the following week, okay, the value is at 100,000 again. It went down a little bit. Remember, because I made 1,000, that would be 101,000. But no. So it always goes by what is in my account at the beginning of the week. I want 1% of that. If it's 50,000, I want 500. If it's 20,000, I want 200. If it's $1 million, I want 10,000. Whatever 1% is my goal of the week. So my goal for the week, and if I meet my goal for the week, yay, I did it. If I don't, it's like, bummer, I missed it. I don't write it down. I just keep a mental note. All right, so this is how much I made in this account. Well, I got to put it into a sheet now, but we're working on the spreadsheet because not having good luck with spreadsheets. Anyway, next. That's a good question there, Megan. Jarv, how many option positions do you hold per week? At least 40. But that's through seven different accounts. Okay. All right, Rude Dude, invest back again. Haven't seen in a while. Gamma, he wants 8,000 to 10,000 a month, so you know. Okay, Gamma, I'm not quite sure who you're chatting with, but 8,000 to 10,000 a month. Well, 10,000 a month, wouldn't that be like 250,000? That's at 10,000. But 8,000 a month would be 200,000. So 200 to 250,000 start out at 1% would be 8,000 to 10,000 at the end of the month. Looking good. Tony, Tom, we already looked at Mark earlier today. At retirement age. Okay. JD. I'm not quite sure what you mean by that, JD, but $1 million, 1% a week would be 10,000 a week. Okay, 10% of $1 million is only 100,000. I'm not quite sure which angle you wanted me to take a look at it from. Joey, does someone always pick up your option? Oh, usually always, yeah. You like that one? Yeah, 50% of the time. It works half the time. How many calls or puts do you do per week? Over 100. Ooh, Scott wants to take a look at Pepsi. Pepsi's a dividend king. They've been in business for over 100. Think about it. Over 100 years. Dividend king. Dividend king means 5 decades of increased profits. I mean, how can you really go wrong with Pepsi? Look at the numbers. It doesn't look that great at this moment because she got a bottom here. She shoots up. Now she's pulling back. How far pulling is going to do? Now, this is just the 1-year chart. It looks normal. Okay, she drops, shoots back up, drops again. Now she's up, pull back right there. It's like she's doing fish hook. That's what it looks like. zoom in. See? Doesn't that look like a fish hook? Okay? She goes down, here's the bottom, shoots up, now she's coming back down again. What happened on Friday? Don't know. Is she reversing? Don't know. We need more days behind it in order to be able to figure out what direction is she going now. Because when she changes direction, she needs, remember that song you probably don't remember it, give me 40 acres and I'll turn this rig around. It's like he's talking about a big, huge tractor trailer. Give me 40 acres and I'll turn, anyway, that's the point. Every time she turns, okay, she goes up, she turns, goes down. She turns, goes up, she turns, comes down. How many days of support and resistance do you need to see before you say, hey, it's going this direction? Because at the moment, it looks like it's coming down, but what happened on Friday, don't know. We'll figure that out on Monday, I suppose. Gamma, the uncle is a nice storyteller, but you shouldn't take what he says at face value. Thank you, Gamma. John wants to take a look at ExxonMobil. Oh, just missed it, John. Check this out. Okay. 2 weeks ago, she shot up. Now she's coming back down again. So you just missed that one. What was the demarcation? I don't remember. Kevo, Newmont, NEM. You missed that run up, dude. Take a look at that. Shoots up. Now she's pulling back. What's going on right there, Kevo? 30-day bottom. Shoots up. Pulls back. Kind of like going nowhere. Finds a new bottom right here, though. So we should be keeping our eye on it this week. Because if that's the low of the 30-day period, we're waiting for that baby to hit bottom, turn around, go back up again. So, who knows? It might be good. I still got lots of these questions. NVDX. Joey, what's MVDX? NVDX. It's an ETF. I'm pretty sure ETFs don't have halfway decent premiums. Well, let's find NVDX. All right, let's look under you. Yeah. Let's see what this thing has. And only, what the hell are we supposed to do with that? Good stuff. I subscribe. Cool bean. TXC Millionaire. What do you think about this? Tool gold is not an investment. From not deflating. Yeah. Or I'm crashing. I'm going to agree with you 100%, Andrew. Gold, expect the unexpected. Okay, Jamar, we just did a little while. 250 days easy. Hey, brother, have you considered a secondary on the popping meme similar to named ticker Dragonfly? Totally clueless there, but okay. Sikanda wants to take a look at Conagra. CAG. Split up. CAG. No real defined line we're going. Okay. I can't repeat that name. All right. So take a look at where she's doing lately, the past couple of months. Up, down, up, down, up, down. So look at this. Down, up, down, up. Now she's coming down. Not the time to jump in. 30-day high here. She drops, pulls back up. Now she's coming back down again. Yeah, just wait if you really like that. Moving stock. Yeah, no way. 100 points a week, 1% each. Okay, Mike B, I'm not 100% sure what you're talking about. GNRC long-term solid company. GNRC. Okay, GNRC. Interesting. Never heard of it. Let's go check on YouTube. Check out their GNRC. Well, let's find GNRC. Even see holding. 100% sure you think this would be attractive. 2012, 2013. 2 years ago. And DDX. No. Sorry. All right, let's get back to what we're looking at here. Hey, James, thank you. CI. What the hell is CI? CIFR. Okay. For why we're looking at it, I'm going to have to say no, only because this thing was at $2 back in April. She shoots up to here. Now she's pulling back. What's going on there? Let's zoom into that. I don't know. It looks interesting. And she shoots up, pulls back. Here's your 30-day bottom. Top, pulls back. 2 days up. Tomorrow might be a good opportunity. Might be. If like this company, CIFR. CIFR. Jar, Flutz, Eric, Riley. We take a look at Riley. RILY. Interesting. Look at that little jump right there. That looks nice. She's dropping like a rock. Now she's bouncing up. Right, change. The supply, almost every fixed residential generator in the country. Dividend wise to attract. Okay, I see you. Never heard of it. Kerry, I've been paper trading for the last 2 months, trading futures like NASDAQ as well as Bitcoin and Ether. I'm about to start using real money. Would you suggest these markets for beginners? It depends on, see, Kerry, when you're a paper trader, okay, no risk there. But it does give you terminology, it does give you statistics, it does give you working experience. But what you're looking at, indexes, NASDAQ, S&P 500, along with Bitcoin and Tether. Well, the second half is a little bit more risky. It depends on what it is you're looking for. Okay, because you may be looking for a ruby in a mountain of rocks. Sorry, that was Meatloaf. It just came to my head. You might be looking for a ruby in a mountain of rocks. Okay, anyway. So again, Kerry, it all depends on what it is you're trying to get out of your experience. Okay? Me, you know what I'm looking for. Simple, safe, predictable, consistent, all that stuff. So I only do companies that are consistently profitable. That's my choice. What you're doing is a little bit different. That's all, just different. What do I think of MSTY? KK Transport. Let's take a look at MSTY. Consistently profitable. MSTY. Variety of you ready? MST. Fourth, 2024 was the very first dividend paid out by this company, Riley. Let's take a look at the numbers. 412. Well, that's a nice premium. A nice dividend, sorry. 412. This one is 412. The second one is 250. So you go from 412 to 250, and you expect your investors to be with. That's almost almost. So it goes from 250 to 3 to 233 to 194 to 185. It goes from $4 to 185. That's more than a 50% drop in just a few months. That's not consistently profitable in my opinion. Okay, and then the next one, back to 419, 440, then to 3, then to 220, and then to 2. Okay, this thing can't make up its mind, and no, it cannot be profitable consistently. So I don't know why you'd put your money in there. It's like, what the hell are you thinking there, brother? I don't know. All right, anyway, let's find out. Next question. What do we have? 86 is in the house. St. Martin, hi. What do I do with the investment in the stock that drops below original value if I do not sell? Well, you could sell covered calls against it. You can do dollar cost averaging, or you can just collect the dividends. Crystal, will you do LTM? What the hell is RLTM? RLTM. Oh, let's find out. What is it, Crystal? Let's take it. RLTM. It's a while to upload. All right, so what other questions do we have? Mike Phelps. Helps to determine if the company is safe and profitable. Yep, Joe, I'm going to have to watch this channel a lot more. I feel I am going to learn a lot because I ask the same as Mike B. Well, okay, so MSTR. You said RLTM. So RLTM is MSTR, RLTM. St. Martin, Siri looks good for covered this week. Let's take a look at it. Okay. Robert Rivera. I don't think that's cryptocurrency. So yeah. No, I'm going to say no to this one. It's just not old enough. Not enough. Kimberly, SMR. What is that here? SMR. New Scale Power. All right. Looks interesting. Am I going to have the same issue with this as I had with the other ones? SMR. What kind of dividends SMR have? Siri looks good. Okay, so St. Martin, we'll take a look at that one. All right, what do we have over here? Grady, Nick, what's going on? Jack, Carmen, Harry, what's going on? Frank Valentine, JJ, Yolanda, Rock and Randy, Mr. Bull. They call me Mr. Bull. Runnings, Barama, Rich Graves, good evening. Chastity, Tucker, good evening. All right, Brad. Netflix missed earnings per share by a one-time Brazil tax down 12%. Greatly oversold. I'm I'm thinking 1080 entry. Does Fidelity have good investments? Okay, Robert, I'm not 100% sure I know exactly what you're asking for there. I'm not, happy Halloween, yeah, thank you. Robert, I'm not a huge fan of relying on other people for stuff. I like to research myself, personally. Brad, I appreciate you chiming in on Netflix. Okay, he said it's down 12%. Looks like a good entry point. Now, don't get me wrong. I don't do Netflix. I ain't paying $1,000 a share for anything. Brad, entry 7 to 10 upside potential. Yep, got that in 2 weeks. Not a problem. Cool beans. What are my thoughts on Netflix? All right, he's got all. So I might as well say a little. That. NFLX. NFLX. Okay, I see what you're saying. Not what I'm looking at, but I see what you're saying, Brad. Okay, you got your year at 741. That was a year ago. The high of 1345. That was the beginning of July. Now from there, she slowly sunk 1300 down to let's call it 1100. That's where we are right now, 1100. So it goes from 1300 to 1100. That's a $200 drop. Okay, fine. Well, look at the drop. Let's zoom into it and take a close look at it. All right, so give me my little, what do they call this thing? Stylus? My stylus. So I'd be styling with my stylus. Okay, so here we got the 30-day high. We got our 30-day bottom. Here's where it was 30 days ago, and here's where it is now. Down, up, this big drop here. Now, we've been over this many times. That big drop there. That's because of the market maker. The market maker gets those 5 little words, we didn't hit our target. Okay, we didn't hit our target. Okay, this happens. Big drop down. They call that a gap down. Well, because there's a big gap there. That's why they call it a gap down. The nice thing about gaps is they have a tendency to fill, which means this is going to find a bottom soon, and maybe this week, maybe next week. I forget his name, but he seems to think at 1080. Right now it's at 1094. Fine. He thinks 1080, whatever. But it will fill eventually, which means it'll go back up for those of you who want to do $1,000 share stocks. All right. A little out of my price range. Alrighty. What do we have next? RITM. Crystal, what's RITM? RITM. It's a no. Sorry, Crystal, I don't do monthlies. Now, monthlies are basically these right here. November, December, January, February, March. Those are months of the year. Yeah, it means I can only do it once a month, and once a month doesn't work for me. Okay, so 12 to 24% per year. That's once a month. Okay, 1% per trade, 1 to 2% per trade. Monthly, they'd be 12 to 24% a year. But weekly, it's 50 to 100% per year. That's what I would prefer. Does Fidelity have good investments? I couldn't tell you on that one. BATS, British American Tobacco. Eric, what market would you suggest for trading, or do you mainly look at more long-term investments that pay off? Okay, Kerry, what I like is weekly options. Okay, my idea of long-term is 30 days. That's long-term for me. Okay, so, and I don't know what your expertise is. I have no idea what you want to do. I have no idea how much time you have to put into this. You can find a good trading strategy for almost any market if you want to jump into that market and get familiar with it and become good at it. I mean, you just got to make the decision. Which one do you want to focus on? Well, this one is easy for me because most people do the work for me. Okay, someone else takes care of that list. All of them. Dividend kings, dividend aristocrats, dividend champions. Well, companies, they strive to do good each and every year, make more and more money each and every year. And if they're successful, they stay on those prestigious lists. And someone else keeps track of that for me. I don't have to do it. All I got to do is I import it into my computer once a year. Well, if they made changes, okay, let me import them. That easy. James, thanks for your time every week doing this nightly. G. Finn, okay, what do we think of the steel a brain rot economic crisis? Alpha Grain, that's an interesting question. But what does it have to do with what we're doing here? All right, Mortgage Magician, CRM. What is CRM? CRM. Salesforce. Okay. Now, it's plain to see, okay, who came up with Salesforce? Mortgage Magician. Okay, Mortgage Magician, it's plain to see. You at the bottom here, the top there. Okay, she went up, down. Now she's going sideways. But look at this drop right there. 30-day bottom, 30-day top. Now she's coming back down. If you really like it, keep your eye on it. Because she's going to turn, but it's going to take a while. I'd say at least a week or two. Because look, okay, 30 days ago, here's your 30-day bottom. Okay, she shoots up, here's your top. Now people are starting to take profits. It's going to come down, and eventually it will find the bottom, bounce off of that, and then go back up again. Because that's what they do. Oh, I got somebody over here asking me about protective puts. Kevin Keenan, do you ever use protective? Never. Never, ever, 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 ever. I've been trading for over 30 years. Not once have I ever done a protective put. I invest in Robinhood. Can I buy weekly options on Robinhood? Yes, you can. Yep, you can. You can. James, thanks for kicking. So, Ivan, I actually use Robinhood also. As a matter of fact, I make more money on Robinhood percentage-wise than I do on Thinkorswim. Okay, I'll do an average of 5 to 7 every single week. Think about it, 5 to 7% every single week. I get in, I get out. Simple, easy breezy. But I do have to admit, I think I got four margin calls this year because of old Humpty Dumpty saying something stupid and people panicking. Anyway, do you think a big stock market crash is coming? Of course there is. There's always one coming. Think about it. If you're driving down the road, right? Think about this. You're driving down the road. A stop sign is coming. Eventually. You just don't know where or when, but it's coming. All right, Jose, ¿Qué pasa, amigo? BMY, Bristol Myers Squibb. Ooh, that's a good company, dude. BMY, Bristol Myers Squibb. All righty. Well, it's pretty much down to the low of the year right here, which is a great place to buy, but zoom in really close. Take a really good close look at it. Okay, 30 days ago, she shoots up, profit taking, brings us down to where we are right now. Hey, here's the bottom, shut up, now it's pulling back. So keep your eye on it. Wait for it to make that, if you really like it, wait for it to make that turn and go up. Can you move your camera? Okay. Walt San Salvi, can you move your camera so we can see your screen? Oh, so Walt, the screen behind me, this screen is actually live on YouTube. Okay, so you're just here on TikTok for the highlights and me talking. But the screen itself right now is live on YouTube. Okay, you can go to the top left corner of the screen where you're at. Tap on that screen there. That'll take you to the website, The 10-Minute Trader. And then you'll go to YouTube. The 10-Minute Trader. The 10-Minute Trader at YouTube. Lisa, how are you? Gabriel, Nico, how are we doing? Nico, thank you. Thank you there, Lisa. Tommy, good evening. S. Nike, hello, James. Can you look at Hormel? All right, we'll take a look at Hormel. Hormel is one of those dividend kings. HRL. Interesting. Had that big gap down a couple months ago. Hasn't filled yet. How long is it going to take? Okay, see, we're here bouncing off that bottom there. Let's zoom in a little closer. Okay, so here's your last 30 days. Your top comes down to the bottom right here, shoots back up, pulls back down again. Keep your eye on it. If you really like it, she'll turn around. She'll turn around. How can I start learning stocks and investing? Literally any name. That's interesting. Literally any name. Daggone one. The golden one. What type of monitor are you using? That's called a vibe board. Oh, how is that? Get you a little closer. Yeah, if I get a little closer than the other screens, aren't going to look right. Sorry, dude. If I go this way. There we go. Right there. All right. That a little better? I had to tilt that. All right. Oh, the Who. Thank you for that. How do I start? Big Azza, what's going on? One day at a time, Azza. Just got paper trading, put it onto your computer. There's a whole bunch. You're welcome. There's a whole bunch of videos. Tells you exactly how to get started. But I always found the best way is to figure out what it is you want first. And then decide what you're willing to put into it. Not only dollars, okay? How much of your time? The more time you put in, the more you can learn. And the more you can learn, the more you can make. But it's going to require more time, more effort. Me, I'm perfectly happy with 1% every week because that's 50% per year. At this point in my life, well, 50% of my portfolio, I'm perfectly happy with it. It works perfectly nice for me. Thank you. Answered my question. Ivan, you're welcome. Audie Bassi, I have no idea what this is, but I've been trying to learn about the stock market to get into trading. Any advice on what to learn and how to get started? Well, yeah. It's simple to get started. You have to decide what it is you want, how much time and effort you want to put into it. More time and effort you put in, the more money you can make. But then again, also the more money you can lose. It's going to be a trade-off no matter how you do it. Time and effort into anything is going to equal to expertise or the more or lack thereof. Okay, so the more time you put into it, the better you can get. The less time, probably the less amount you're going to get. Anyway, I'm new here. How do I find out more information on your strategy? The funny thing is, you're new here on YouTube. Okay? So you're actually on the YouTube channel. All right? So the YouTube channel that I have over 1,200 videos. So you can just watch the videos over and over again. They take you step by step through the whole process. Got it. All right, Audie Bassi. All right, so okay, Jose wants to take a look at STZ. Now, STZ does come up on my list every once in a while, STZ. Same thing as almost everything we've seen. Okay, you get the high last year. Now we get the bottom just recently. What's going on? Well, it's bouncing off that bottom of the year. That's the bottom of the year right there. She's bounced off that, came back down, back up. Now she's come back down again. Well, if you really like this company, just keep your eye on it. Okay, you've seen me do the covered call. You jump in, grab your 1%, jump out. Now, I'm not telling you to do that. I'm just telling you that's what I do. I jump in, get my 1%, I get out. But I do it every week, only 10 minutes a day. Carrie, is it realistic being able to grow 20,000 into 100,000 in a year with putting in the work and charts every day? Or is it one more unrealistic? Well, it's not unrealistic, Carrie. But it's easy to make money in an up market, which is where we are. If you're going to do it, now's the time to do it. I can't tell you what to do, okay? But we are in an up market, and who knows how long an up market lasts. Because up markets are always followed by a crash or a setback, a pullback, whatever you want to call it, a correction. Call it whatever you want. Stocks go up, and then they come down. going from 20,000 to 100,000 in 1 year, there is going to be a lot of risk there, buddy. Alrighty. I think I'm done with all the questions. How could that be so? Crystal, you're welcome. St. Martin, we never looked at Siri. Well, let's take a gander at Siri. I do have some Siri, by the way. Interesting. Well, we got, 40 minutes left? So I might as well get up. Get up, you lazy bum. Glasses. All right, let's do this. You ready? Here we go. The high, the low. Where was it? Where is it? Look at this. Up, down, up, down, up, down, up, down, up, down. What's going on here? Now I want to zoom into that, find out what's the last 30 days look like. Well, it does not look very inviting, does it? She comes down, up, down, up. Now she's coming back down again. Well, for my style, this is just my style of trading. There's lots of different strategies. There's lots of different ways of doing it. Okay, you shouldn't listen to me. What the hell do I know? I just do the obvious stuff. Okay, I like simple, safe, predictable, consistent. That's what I'm looking at. What else do we have? Coca-Cola. Who said that one? The Who. What's my thoughts on Coca-Cola? Now, normally, my thoughts on Coca-Cola are usually no. The reason why Coca-Cola is usually no for me is this right here. 69.71. The 70's going for 37 cents. Okay, that's less, right around 0.5%. Now, think about it. 0.5% a week is 26% per year. Okay? What's wrong with 26% per year and 0.5%? This is Coca-Cola we're talking about. Okay, it's been around for over 140 years. They basically know what they're doing. At least I like to think so. David Wade. Oh, Joey wants to look at FCX. And then address you, Mr. David Wade. FCX. Now, I do have some FCX, believe it or not. Here's the numbers. Here's what it looks like. Okay, you got your low. You got your high. Where was it? Where is it? Look at the motion. Down, up, down. What's going on there? Okay, here's your 30-day top. Drops down, shoots up, back down. Now what's going on here? She's basically going sideways. Not really that attractive. Okay, we need a couple more days going up. So David, I have ADD. I can't do this anymore. Investment firm has my measly account. See, David, I got ADD also. It's like squirrel. I get sidetracked all the time. Okay, the strategy that I'm teaching, same one I told my 9-year-old. Simple, safe, predictable, consistent. Look at companies that you don't mind owning. Just take it segmented, like compartmentalize. Step 1, step 2, step 3, step 4. Just take one step at a time. If you have ADHD, just like I do, you got to check them off. Step 1, kept my list. Great. My list, Dividend Kings, Aristocrats, Champions, blah, 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 blah. Okay, and then you just put it into the calendar. And then the calendar will tell you exactly what stocks you're looking at today. Okay? That's it. That's all I'm looking at today. Just those. Nothing else. Because these are the companies that have their dividends coming up. And when we know the dividends are coming up, well, we know the stock goes up in value. Well, if the stock goes up in value, and we do one of the safest trades there is, the covered call on a dividend stock, while it's going up, I can get in, I can get out in a week, get 1% a week. Now, 1% doesn't sound like a lot. It sounds like a lot of effort. Well, look at it this way. 10 minutes a day, okay, 5 days a week, that's not even an hour a week. And if I can get 1% of my account in 1 hour, if my account's $150,000, that's $1,500 for 1 hour of my time. I'm pretty sure I can figure it out. Okay, the rules are simple. Never buy something you don't want to hold. Make a good list. Well, that part's pretty easy. Second, never sell at a loss. Well, that answers that question. Ooh, low battery over there. there. That baby's going down. Rule number 3, make sure the companies are consistently profitable. Well, they wouldn't be on my list if they weren't. Weekly options only. Well, they wouldn't be on my list if they didn't. And then number 5, make sure the numbers work. What am I buying it for? What am I selling? What am I collecting? And what should I do next? Most of the time, just sit and wait. What should I do? Went up, down, up. Okay, I bought it, I sold it, this is where it is. Just wait it out. Most of the time, all I'm doing is waiting. Waiting for the stock to move or waiting for the option to expire. One or the other. But yeah, David, you can do it. Just one step at a time. What do I think about CCCX? How about no, hell no? Find out. CCCX. CCCX. Oh, hell no. Look at this thing. She shoots up, pulls back up, and it's a monthly. I don't do monthlies. Plain and simple. I don't do monthlies. Sorry. Do you use a screener on Thinkorswim? No. Dimitri, how are you today, Dimitri? Sammy, when are you going to do a UK video? Okay, Swami, terribly sorry, dude. I know absolutely nothing about the UK market. I have no idea what I know it's called the FTSE. That much I do know. But I've never looked at it. There's no reason for me to look at it. Okay, why would I invest in companies I have no idea who they are? No, don't get me wrong. I'm pretty sure it'd take me maybe a couple of hours to figure out, because somebody somewhere is keeping track of all that information. Okay, there is a number one stock somewhere. In the dividend information, what about those? What are the different rules as opposed to here? So there are certain things to take into account. Okay, some things I know, some things I don't know. Makes sense, right? Kevsta, my 3 covered calls are carrying over to this week. Pull beans. TJR. Thank you there, Mr. TJR. All right. Kroger. Who wants to take a look? Oh, Cincinnati's back again. Kroger. KR. Interesting. Oh, Raj Leo Casas. What were the 2 symbols you said? Siri and FCX. Okay, Siri is SIRI and FCX as in Frank Christmas Xavier. Okay. When are you going to do the UK video? Swami, we already talked about UK videos. Joey wants to take a look at Nike. All right, we're going to take a look at Nike as soon as we're done with Kroger. All right, so here's Kroger. High, low, where was it? Where is it? Up, down, up, down. Well, that was simple. Okay, if you really like Kroger, let's zoom into the 30 days. Okay, down, up, down. Not this week, but I'd still be watching it if you really like Kroger. Carrie, I really appreciate all your insight that you have already given me tonight. Would you recommend one stock to look into? Last question before subscribing and going to bed. Not really. I don't give recommendations. Terribly sorry. I mean, I like the Dividend Kings, the Dividend Aristocrats, Dividend Champions, and Dividend Contenders. Any company that's consistently profitable year after year after year. Well, that's lovely. Is this futures? No, this is just stock investing. How do I feel about Verizon? Corey, Verizon. VZ. Oh, this looks interesting right here. Corey. Okay, here's your high. Here's your low. Here's where it was. Here's where it is. Look at this. Up, down, sideways, down. What's happening right there? Is that the new low or the, actually not the low of the year? All right, let's check these numbers out for a second. 38 to 39, 39, 39, 65. Nice. Everything looks good. Well, let's find out. A year ago, Verizon's at 41.50. Bottomed out in the beginning of January at 37.50. Well, 2 months later, we're at high of the year at 47.30. All right, so let's look at the last few months. The last 30 days to be specific. Right, here's your last 30 days. So 30 days ago, we're right here. We drop, back up, back down, and now that right there looks like it could be the beginning of the bottom here. Now she's bouncing up, going up again. Could be the beginning of that if you're into picking bottoms. Now, I like 2 days to the upside, so I'll be keeping my eye on this thing tomorrow. And then if it looks good, I'll be jumping in on Tuesday because I like 2 days to the upside. We already got one, but I want two. And then I'll jump in on the third day. But that's me. You got to figure out what works best for you. TJR, what's the best pick now that's attractive? Well, for me, that would be, what was that? Ford was good 2 weeks ago. That came and went, though. Kohl's, that's the one. Kohl's was really good. All right. Sorry, I am an older gentleman. How is type Siri your ticker symbol in FCXR? Okay, Raj, Siri is S as in Sam, Indian, Robert, Indian. Then FCX is it Frank, Christmas, Xavier, right? Okay, what platform or broker do I use? TSK. This is Think or Swim. TOS. And that's through Charles Schwab. Don't get me wrong, Charles Schwab has their own trading platform. I particularly don't like it because I've been using this one for over 20 years. And the one thing I like about this one, it's the same as it was 20 years ago. If it ain't broke, don't fix it. It's one of my pet peeves. If it ain't broke, don't fix it. One thing I hate more than anything, one of the few things I hate more than anything, is when I come to my computer and it says, your computer has been updated. You're welcome. It's like, oh, I didn't ask for that. Leave my damn shit alone. Must be close into the night. I'm out of tea. What do we have? Can you review ASST? I'm going to say hell no. Who came up with that one? Simply Orange. The reason why I'm saying no is this thing was like less than $1 a couple of months ago. Okay? She shot up to 13, dropped back up, back down. Now we're back at $1 again. See, I don't follow stocks like that because they don't happen consistently. They don't happen predictably. How often do you actually find something at 50 cents that shoots up to $13? And then, how do you know to hold on to it? Because if it doubles, okay, you're in at 50 cents. She doubles, triples, quadruples, quintuples, and then keeps going up and up and up. And what do? Just say, yeah, I'm going to wait. I'm going to wait. I'm going to wait. And then finally you get 13 and say, I'm going to wait. And then she drops back down to 1. See, I don't play that game. I like consistency. I like predictability. Terribly sorry. Besides investing and family, please tell me one hobby you have. Solar electric boats. I'm starting my own I have a manufacturing company. We make solar electric boats. I live here in Florida. Sun is shining. I get to float around for free. So we're actually going to be doing a big boat. We just don't know which one. Do I do this one or do I do this one? You know, and then everything's going to fall into place. It's not as easy as people think it is, but for the most part, it's kind of easy. You take out all the internal combustion crap and you put in electric motors and solar panels and batteries and whatnot, blah, blah, blah. You're good to go. All right. Jeff, Bill, we got 4 more questions. Thank you. New to the game. I appreciate the insight. You're welcome, Simply Orange. Oh, J.E., take a look. Lorenzo wants to take a look at General Electric. Hell no. Don't be wrong, Lorenzo. I don't. It's a good company, but I don't buy at the high of the year. Okay? It just doesn't make sense. Do you own an electric vehicle? I have an electric boat, but I don't have an electric motorcycle, and I don't have an electric car yet. Can I start trading without any identification? Probably not, because they're going to want to make sure you're an actual human and you're an actual, well, how to tax you. Isn't that weird? You can't trade until they know how to tax you, which you got to fess up some type of identification, I would think. Please explain how your Robinhoods are better percentages. I have a different margin on my Robinhood, Mr. Richard. And also, most of my Robinhood trades are calendar spreads. Most of them. Which is a higher percentage. Destined for Greatness. What a cool name, Destined for Greatness. S. Nike. Thank you for Hormel. Can you look at EP? Hell no. I look at EPD every week. It's no, because I believe EPD is monthly. EPD. Oh, nope, wrong one. Oh, something else. All right, so Nike, what are we looking at? I can't even get a driver's license. They messed up my name on my birth certificate. Okay, sorry, nobody can help you there, brother. Robinhood has cheaper commissions too. Thank you there, Joey. K-Van wants to take a look Tria. Hold tight. Take a look at EPD for a second. So here's EPD. Here's the high. Here's the low. Here's where it was. Here's where it is. Up, down, sideways, down, up. Okay, so what's going on here? What makes this thing so attractive this week? The last 30. Right? She shoots up, pulls back up, back down. Not quite. And if you really like it, you got to keep your eyes on it. It went from 30 to 30.40. 30 to 31.40, which is $1.50. And $1.50 on a $30 stock, well, that's 5%. So it went up 5%. Now it's coming back down again. What's on your watch list for this week? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. That's my list. I look at the same ones week after week after week after week. My list doesn't change. It stays the same. What's your DD on... If I put in $700 a month, how much could I make potentially? Well, it depends. Rex wants to take a look at Dow. But nobody. It depends on what you're doing and how much time. It's not just putting money in. You actually got to put some work and effort into it. This is not, push a button, and you get your change. It doesn't work that way. You actually have to do something. So just putting money in, that's just the beginning. Then you have to decide what strategy makes the most sense to you. Once you figure out what strategy makes the most sense, then you got to figure out what stocks do I want to invest in. Okay, and then as they pop up, because what I'm doing, I got my list, okay? And then from the list that I got, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. I say it every single night, 5 lists. Between those 5, get us 300 decent companies that are consistently profitable. So why not invest in a company that's consistently profitable? There's over 10,000 companies. Well, why would I choose the other 10,000 if 300 is the only thing that fits my description or my desires? It just kind of makes sense. Okay, what do we have here? Kerry, just watch your video on why there is no risk in your strategy. I never knew of a company liquidated investors, but get a compensation. You're full of learning lessons. Thank you, Kerry. All right. Kvan wants to take a look at Altria. Altria, M-O. Interesting. I like that little dippy right there. Okay, here's our high, here's our low, here's where it was, here's where it is. Look at this. Up, down, up. Basically, I mean, I could do, I could do that, but why bother? Here's the bottom, here's the top. Now she come back down and she's bouncing off. I want the big picture. I don't need the tiny individual picture because I can't do anything with this information. The only thing this information is good for is here's the bottom. She went up, back down, back up, back to blah, blah, blah. Okay, what's the big picture? Bottom, top, that's the direction. Next. All right, 64, 67. So at 64.67, the most likely strike price is going to be the 65. And that's right there. And that's going for 96, which is 1.5%. Well, think about it. If I'm looking for 1% and this company's offering me 1.5%, and it's Altria, okay, they have over 5 decades of profits. Profits, 5 decades. So they get all that moving for them. And look at this. She's bouncing up right there. Okay, so let's zoom in closer to get a better look at it. Here's the last 30 days. 30 days ago, we're right here. Here's the high, here's the low, here's where it was, is up, down, now she's up. 1, 2, 3, right there. 1, 2, 3. There's your 3 days to the upside. To me, that's perfect. Because even at this price, 64, 67, the 65s are going for 96, which is more than 1.5%. And 1.5%, for me, that's awesome. Well, let's do some numbers. Let's do a sample with Altria. I mean, why the hell not? The company's a decent company. Been around for a while. Let's get rid of this. Let's change this to right there. And let's do the 65s right there. Contract to get a good idea. You should have a good idea of how much money you can work with. 40, 50,000. Great. I can do 4 of these. Well, I can do 2 of these. Oh, I can do 712 of these. We all have a different amount of money we can play with. All right, so buy 1 covered call Altria. That's that right there. 31 October 25. That means it's expiring this coming Friday. I want to be in. I want to be out. The $65 call option. Well, if I'm buying it at 64, 67, well, the next logical number is going to be the 65. Okay, so 65 call option against the stock at the market to open. That's the order right there. Okay, maximum profit. Okay, right there. Remember when I said simple, safe, predictable? I know exactly what I'm going to make before I even do this trade. So I don't have to wait for the stock to move. See, most people buy a stock and they got to wait for it to go up before they sell and get their profit. Well, here, the stock doesn't have to move at all, and I'm still making a profit. If it does move, great, more profit for me. If it doesn't move, oh well, I still get my profit. That's why I like it. It's a simple, safe strategy. Okay, 139 is the profit. $6,000 is my investment. Let's see what the rate of return is. Now remember, you got to change your way of thinking, because we're not investing for annual returns. We're investing for weekly returns every 7 days. So if this is the order I put in tomorrow morning, profit is going to look something. Got to get my calculator. All right, first profit 139 and 50 cents, 139.50. Divide that by the investment. That way we get our weekly return. 63.61. Okay, it's 2.1%. 2.1%. Now, if 1% a week is 50% per year, 2% a week is 100%. That's doubling your money. How often have you doubled your money every single year? Anyway, next, what do we have next? Oh, you know what? I'm going to save this one. Let's see if I can save this one. This was 2.1%. All right. Nice. Now, go like, there it is right there. Go like that. Right there. And we said it was 2.1%, right? Here it is right here. Alright, right there, Altria. Okay. 2.1%. Whoops, come on. Alright. So what did we come up with tonight so far? Marvel and Altria. Okay, we came up with this weekend. Look at that. That's crazy. 109%, 111%, 24%, 4.3, 3.8. Those were interesting numbers. Okay, back to where we were. There we go. All right, back to where we were, and there it is. Okay, so I like that one, Altria. Who came up with that one? K-Van. Nice pick, K-Van. All right. Nike, do you trade EPD? Okay. What's your list for this week? Whiskey. Jameson whiskey, please. James Van Hooser, how are you today? Well, we seem to be out of questions, so guess what? We're going to call it early. You guys, no more questions, so why hang around, right? Just watch the video. Ooh, got questions over here. Oh, NMRA. Juan, what is MNRA? Let's get out of there. There. Oops. Let's do right there. Let's get that out of there. Okay, MNRA. Is that right? NMRA. What is that? Hell no. I don't do monthlies. Kimberly! Hey, Kimberly. You want to look at Riley? R-I-L-Y. Interesting. Just learned paper trading for now. Cool beans, Nike. Okay. I don't work. I have the time, but I also know not every day is a trading day. Thank you there, nobody. But Monday through Friday is eclectic intellect. If you were starting out with, with 20,000, what would you be the exact step-by-step approach you would take? I'd probably do covered call or calendar spreads. Okay, we're checking out Riley. Hold on. Riley, here's the high, here's the low, here's where it was, here's where it is. She's down, she's up, she's down, blah. Look at the last 30 days. Last 30 days. Ooh, check that out for Riley. Who came up with this one? Kimberly, nicely done. Check a look. Okay, here's the high, here's the low, here's where it was, here's where it is. Look at this. Up, down, up. Here's your 1, 2, 3, 4. 4 days to the upside. 5.5. 5.5 is going for 31. Well, 31 on a $5.5 stock, well, that's over 3 to 5%. At least I think so. Low battery. All right. Okay. So I like Riley. Let's do one on Riley. Riley. Okay, covered call. We're going to do these sixes. One contract at the market. Here we go. And we have it. Wow. I like that one. Oh, my friend from Norway has made over $250,000, but he has invested it in a lot of arms company because he says everything government funded is a gold mine. Yeah, probably. Little bottle. Should I buy 20 Apple stocks and get 2 more every week as I 14-year-old? Okay, little bottle, I can't really talk to you, dude. All right, 14 years old, you really got to talk to your parents on that. Terribly sorry, brother. Okay, I can't give you advice. My advice would be don't talk to strangers online. Anyway, let's keep on going. Cincinnati wants to take a look at BP, British Petroleum. Oh, wait a second. I like this one. This is Riley, and the numbers look pretty good. Okay, buy one covered call Riley, 31 October, that's this Friday. The $6 call option. $64 is the profit, 536 is the investment. So what rate of return is that? Calculator. 64.50. All right, and we divide it by the investment, 536. Well, that's not a lot. 12% cannot be right. Let's do the numbers again. Okay. Let's get out of there. Okay. The 6s. It's covered talk. It's 6s. All right, what's the 650s look like? 650s. All right. 109, 540. Wow. Same thing. Buy one covered call Riley's, 31 October. The $6.50 call option. The profit, max profit, 109. Cost of trade, including commissions and fees, 541. Well, let's see what that number looks like. $109 divided by 541 comes to a grand total of 20%. That's a nice number. It's kind of unrealistic, but seriously. Kimberly, you see the numbers for Riley? I don't have a pen to write that one down. I put Riley down first thing in the morning. That looks good. Okay. Tony. Finally, someone not yelling into the mic. Okay, sorry about that. Would it make you feel better, Tony, if I yelled? Dragon Skin. Why not stick in a money market account when you're talking a couple points? Wow. Well, Dragon Skin, thank you for that. Here's my line of thought. Okay, this is just my line of thought. Okay, a money market account is not going to give you 50% for the year. It is not. Okay, what's the highest one? What is it? 4%, 4.5%? I'm looking for 1% every week. Now, 1% every week comes over 50% per year. Why would I put my money in a money market account? And a couple of points per week, not per year. A huge difference. Now, you're used from the sounds of the conversation. It sounds like you're used to annual percentage rates, and in that case, you would be right, because 4.5% on a money market account. Well, great, wonderful, but no, I'm getting 1% a week. That's over 50% for the year. So there's a huge difference. Okay, Cincinnati, we'll take a look at BP in a second. What are arms companies? Would you say government-funded arms supplies are a safe investment due to the printing of money, blah, blah, blah? Yeah, yep, I see that. Your image is mirrored. Thank you. I knew that. What about the arms dealers? Dow, I'm serious, my friend, has made $250,000. Yeah, so? Andy, Alibaba only has like 2 or 3 years of dividends. So I usually tend to stay away from them. What stock should I invest in as a 14-year-old with around 12 grand? Okay, little bottle, I told you I can't talk to you, brother. Really can't. It would be inappropriate for me to talk to a minor online, especially if I don't know you. So I'm going to have to say I can't talk to you, brother. Sorry. It definitely puts me in an awkward situation. Now, if you ask me a question, you don't tell me how old you are. Well, yeah, I can answer the question. But if you tell me you're 14, no, I can't talk to you. It just ain't happening. Sorry. Gustav, Stick money in a crypto and see a 50% return per year. Hey, Gustav, I'm going to have to disagree with you only because I haven't seen a crypto yet that was consistently giving me a weekly percentage. Haven't found one yet. I'm looking. Like XRP. XRP does not have weekly options. Does XRP have weekly options? Let's check. Let's check before I say anything. Let's check out XRP. XRP. See, I got a minor problem with that, Gustav. When I put in XRP and this is what pops up, okay, nothing here, what the hell am I supposed to think? Greetings from Markham, Ontario, Canada. Good evening. Antom staked has 15% PA. I have no idea. You for giggles. Yeah, okay. Pulse chain. George, you got to give me the ticker symbol. No idea what that is. Mike Sweeney, what is the ticker for Riley? RILY. Okay. AGNC. Oh, hell no. John, you take a look at the numbers for AGNC. James, what does it mean when you make a covered call and the trade cost is the same as the profit? Nice. That's what it means. It means it's nice. If I find that rather strange because I think there's a slight possibility. If you give me the example, Nico, I'd love to run it up so everyone else can see it. But from what you're saying, it doesn't sound like something that normally happens that way. Look your strategy. Take a look at SOFI. Lorenzo, thank you. SOFI. As if I've never looked at. All right. SOFI. Saved me from why no idea. All right. We're waiting. It's coming. Hold on, cause I'm a soul man. I'm a soul. What's taking so long? MSTR. I don't want MSTR. I want SoFi. The reason why I want SoFi, I came up with SoFi anyway. Lorenzo. Okay. Hold on, Lorenzo. Don't take off so soon. It's not popping up. Damn it. Why isn't it popping up? Stop it up. Okay. SOFI. SOFI. Okay. Here's SoFi right here. Why would I do SoFi if it's at the high right here? Okay. She drops back up, back down, back up, back down, back up. The high right there. Usually high, okay, once, twice, 3 times. And it's not going over 30 bucks. Well, what makes me think if I jump in, it's going to go over 30 bucks? The bottom's here. Okay, here's your top 3 times. Okay, now she's up there. It's not something I want to do. PLTR has not been around for 20 years. Sorry. Ooh. Flame of Anar. Is that PI or PL? What to do when stock tanks? Number one you should do, Jesse, is not panic. Who was that, Jesse? That was REL, R-E-L. Yeah, you don't panic. Bro, you need to do fundamental analysis too, not just technical analysis. All right, Beef Supreme, guess what? I'm going to agree with you 100%. Okay? But Beef Supreme, you're new here and you're jumping into a conversation halfway through without knowing all the other information that came along with it. So you're right about the technical analysis and the fundamental analysis. But what you're missing, okay, are the steps. Okay? So there's 5 simple steps. Rule number 1. Never pick a stock that's not on your list. Do you hear that? That's not on your list. So hypothetically speaking, Beef Supreme, a stock would never, ever, ever show up on my list without me first doing the fundamentals, which means Is the company profitable? What are the earnings per share? What's the book value? What's the PE ratio? All that kind of nice, neat, fun information. I would find that information out first before I add it to my list. Thus, the fundamentals are already done. So anytime a stock comes up that's on my list, I don't have to look at the fundamentals because I know it wouldn't be on my list if it didn't already pass the fundamentals. Okay, so every week we check. Last week there was 10,370 different companies. 10,300. Thank you, Beef. I appreciate that. Okay, no, seriously, I do. People will say shit and then they just disappear. But I appreciate that. No, but you're right. Technical information is one thing. Fundamental is another. But when you can combine the two together, when the fundamentals are all awesome, consistently profitable, affordable, going in the right direction, and all the numbers working, the book value, the revenue per share, the earnings per share, all that. When all that stuff is going in your favor, great. Well, now we look at the technical. Okay, where's the high? Where's the low? What direction is it going? Well, this thing's at the high right now. Okay, here's your 30-day bottom. Now she's shot up. Do I really want to play in that playground, or do I want to wait for it to pull back before I jump in again at another time? Okay, so Nico, the question, it's a good question. Never heard it before, but I would have to see the actual trade itself to be able to figure out exactly what that means, if that makes sense. CG, don't tell them. Bro, you need to do some fundamentals. Okay, I got that one. Kevo, I think you should add new and earnings in your analysis, especially since you're doing weekly. Okay. New earnings and analysis. Okay, Kevo, so look at it this way. I just finished explaining it to Beef. Number one, I do all of my fundamental analysis before the stock gets onto my list. Once it's on my list, I don't really look at the fundamentals anymore. Okay, because if a stock cuts its dividends or doesn't make as much money, it's going to come out at the yearly report. And then the yearly report, well, they're either going to be continue to be a dividend king, dividend aristocrat, so on and so forth, or they get booted off that list. That is when I update my list at the beginning or the end of every year. Which companies actually made it this year. Because every year they take some companies and they add them to the list, and they take some companies off the list because they missed a dividend or the profits weren't the same. Okay, Mike, thoughts on Amazon? It's the only one from the Mag 7 that has not rebounded. AMZN. I'm not quite sure what you mean by not rebounding. Okay, the top was at the beginning of last month. Well, then she dropped last week. Now she's shooting back up. See, up, down. Now she's going back up again. I'm not quite sure what it is you're looking to get out of that. All right, it's past 11, and we seem to have answered all the questions. Yay! All right, that being said, you guys have a great night, and we're going to do this all again tomorrow night. Yay! All right, you guys have a great night. And stop. All right. And good night. All right, Mr. Joey. And done. And done. I think, okay, thank you. And done.